Hi, everyone, and it's super nice to see you all here in our yet another Palo Alto Research Collective call. It's super amazing you've made it. We are continuing our quest into connecting brilliant engineers, founders into one thoughtful, brilliant community that's about to change the world soon. So hosting today's meeting will be, well, myself, Ivan, and Malika is also helping me out here as a co-host. So we have a pretty tight schedule today because we have 3 projects that are going to present their pitch decks. So the order is as follows. Let me just give me a minute. So Nikolai will be presenting a Sugarverse Saga project. Then we have Leon Gerard of Vandenberg from Sunified Energy project. And lastly, we have Iri Zohar, who is going to be presenting Bring Web3 project. So yeah, we have 3. And please, all the speakers, mind the timing because we have 20 minutes for you to present your project. And also, please allocate some time for the questions. And yeah, all of you guys can ask questions in the comments, in the chat actually, or you just can vocalize it after the presentation. Well, we don't mind. So yeah, Malika, if you have more to say, I think we can start now.
Yeah, Nikolai, go ahead. Thanks, Ivan.
Yeah, thank you, guys. So we're a Web2 gaming studio. We have been around in the gaming space from a long time, since 2006. We have developed 10 Web2 games already in the mobile space, and we have over 60 million downloads and players in our applications. And we are now jumping in and creating Web3 games with Sugarverse. This is gonna be our IP, and we're building 5 casual mobile games. So those are some stats about our studio. We're focusing on building casual mobile games because our skills are there, and we're only focusing on mobile because we think that mass adoption is more reachable through mobile games. We also see that the segment is not so many game developers currently in the Web3 space are developing mobile games, but we think that our target markets are in Asia region mainly, and there all the users have mobile devices and not so much PCs and other consoles. So our first game is going to be a PvP match 3 game, and we are currently at a beta stage ready. We are looking to launch a global launch this year around Q3. So here are some of our partners and backers that we already work with. Tezos is one of our biggest backers. We are going to build our games on Tezos, and we have received recently a grant from them. We're going to build also our games on other multiple chains, but we are going to start on Tezos. So these are some of our graphics inside the game. We have made our games in a very different way as of many of the Web3 games, because we think that one of the reasons why not so many games are have a big life cycle is because they have not sustainable reward system, and we have made our games with a very sustainable reward system over time. So what we're looking for, this is the product I already shared with you. Our target market is Southeast Asia, MENA region, India, Africa, and we are looking for 2.5 million at a fully diluted market capitalization of 9 million. So here are some of our studio metrics. We have 4 million in revenue for the past year. This is for the Web2 studio. We have over 30 developers in our team. We operate because we are very focused on making our games very specific for every country that we enter. So we make them in different languages, and we operate in over 70 countries. And this makes our retention rates much greater than many of the other competitors. So currently with I'm talking about some of our Web2 games, we have 35% retention rate for day one. And I'm talking about a game that is years old. So we know how to make in-game mechanics and game loops so that players come and return and play again and again our games. Our business model is focused on the PvP games, and we're making it. We're using game mechanic, which is called non-zero-sum game. We're making that 3 players enter the games and only 1 player wins. The other 2 players are losing, and this is always making surplus for the game studio, and here not again the game studio but the community treasury, and which makes it like very predictable, and the rewards can continue to be the same dollar value over time. So here is more about our game economy. There are multiple main income streams, and those income streams are filling the community treasury. All the token holders who walk their tokens, they could after that vote how this community treasury is going to be spent through player rewards, token burning, and company revenue. So what are our mission, vision, and goals? We want to revolutionize the mobile gaming with our blockchain technology and with Tezos. Also, our vision is that merging traditional gaming fun with Web3 mechanics is going to create a product that a lot of people would like to play. And our goal is to establish this sustainable economic model, which is not seen currently. And there were very big games, but because of their not sustainable reward system, they decrease their activity over time. For development of every of our games, we are looking for 300K. This is just for everything we are doing in-house, from the art and animations to the backend, everything. So this is for the first development of the game, not for after that the long-lasting versions, etc., etc. So our roadmap is alpha game coming in. It already is online, and I can send you after the call and try it. So we're currently fundraising. We closed our angels and seed round, and also we have oversubscription for the Launchpad public round. So we're currently raising our private round. We're looking to have NFT launch of our NFT collection, which is going to be 10,000 sugar bears, and also TGE in end of Q2. We already have commitments and signed some exchanges, centralized exchanges, and we are in talks with others. So we're very much investing in the game lore, because this is also another thing that makes bigger retention rates and more players coming to your games. So this makes your players to your fans, and then they're more active, and they're coming and playing your game over time. So also connectivity, those sugar bear NFTs and also the tokens, there will be the same NFTs and the same tokens across all the game ecosystem. And sustainability, I already said about the sustainability. So about the team, we have other Web3 and Web2 companies. Some of the Web3 companies that we already have is Hydrochain, Walktrip, and JJX. Those are already listed on some of the biggest exchanges trading, but they're not gamified projects. And we also have, we are founders and CEOs of other tech companies, like one of the biggest printing hub in the UK. We have a staffing agency with over 100 developers here in Bulgaria, because we are located in Bulgaria. Also other companies that we have. So here is the token sale plan. I think it's very investor friendly. We are looking for good price discovery at the beginning of our sale. So at 9 million fully diluted valuation, we are seeking for 2.5. So we're seeking now for 1.5. The rest is fiat. Here is how we have distributed our tokenomics and the vesting schedule. And please, I can answer now to all your questions.
Thank you, Nikolai. Yeah, guys, if you have any questions, go ahead.
Yeah, I just got a quick question because I saw you were doing, if I'm not mistaken, company revenue as a reward to the token. So I'm not sure if you can kind of explain what's the legal framework behind the utility token you guys are building. That'd be great.
Yeah, absolutely. So the thing here is that we are only using the distribution model of like a casino model. So the distribution of the rewards is taken from there, because I have previously worked as a mathematical modeling in an iGaming company, but all the games are skill based. So only the skills are going to win your games. So it's not pay to win, it's only a skill-based competition. So we don't need any legal licenses for this to be listed on the stores. The current, I know that their current, maybe you're talking about this, that about the tokens and how are we gonna be listed on the game stores. Currently, we're having game points in the games, and those game points are exchanged, and they can be exchanged for our tokens. So the first thing and utility of the token is that to enter a multiplayer match, which is like the big thing in the games, you must pay. Let's say you have a buy-in of $1 in our tokens, and then there is we make this big buy pressure from the players, and when you distribute the rewards, they are 7% less. So the sell pressure is less than the buy pressure, and this is how we are managing with this issue.
And for example, like the revenue, that the company revenue, is it attached as well to anybody that just simply invests on the utility token or buys it on an exchange or anything like that, or strictly to the people that actually play the game?
It's on the token holders who walk their tokens, the staking vault and a pool, and when you walk your tokens, let's say for 1 year, and you have voting rights, and then you can vote on how much percentage to go from the community treasury to the company revenue.
Okay,
but it couldn't be zero, like zero. Nobody wants.
I understand you. I understand you. I just, and this is a heads up, because again, this is kind of where we work on, but just be very careful with that, because that might enter into security regulations, because again, it is a promise of return that what you're doing. So just be careful. I suggest you kind of doing a very extensive legal framework. Again, we can text about it, but be very careful with it, because again, as soon as you have a United States consumer there, I mean, you're not going to be suing in this year, but maybe in 5 years to come, you could probably get a little letter by the SEC or anything. So just be careful. That's all.
Absolutely. We're currently not focusing on this market, and maybe at the beginning games won't be available there, because most of the gamers are in the Asian region, and for them also a reward of $1 to $100 in a 5-minute game is something big, but for the Americans it's not so big.
Yeah, not perfect. Sounds good. Yeah, I think that'll be out.
Yeah, thanks Block Investments. Always problematic, right, with the US based users.
Hey man, you gotta be careful. It's just, I mean, there's ways around it, right? You just need the proper legal frameworks. And again, if you're building a utility token, at least on our side, we never suggest to implement any rewards or anything. It's just strictly access and benefits to a platform or video game or anything like that. But again, everybody, it depends on where the jurisdiction is at and everything. But there is ways around it. You just gotta be careful. That's all.
Thanks. Okay, more questions. Okay, if there are no questions to Nikolai, maybe we can continue.
So thank you for everyone for coming. I guess I wanted to welcome everyone to, learn a little bit more about solar. My background is I'm a systems design engineer, Canadian, born and bred, but I've got Dutch DNA, so I'm here from Amsterdam. We've built a DPIN infrastructure network to digitize and tokenize solar panels. This is a gigawatt solar park behind me. It's about 2 million panels. and that gigawatt of panels is really in Dubai, about 75 square kilometers of solar. We think that solar should be democratized, and that the capability of how could you do that is to create a unit economics so that you can give property rights to someone as a real world asset token. So Sunified is a platform for doing this. We use IoT to enable solar panels anywhere in the world to be tokenized and turn into an infrastructure model that allows a brand new digital capital stack. How we're going to enter the market is to solve problems. The solar industry is booming. It's really growing exponentially. So we had quite a bit of solar installed by China in their own region. China owns about 80% of the solar panel production in the world, and they're exporting their panels to Europe, Australia, and around Australasia, Latin America. And solar has now beaten other grid generation options. So solar plus storage really now beats gas generation, does not beat nuclear or hydro, but it is really green, and we think it can be naturally democratized. So we wanted to find a problem in the industry that we can solve with our sensor. The main problem with solar panels is they don't report on themselves when they're in a big field like this. You need to know, is the panel dirty? Is it tracking its warranty? Is there any problem with the panel that it needs to be maintained? So this is called operations and maintenance. And if we can do that, then we can provide a data set to the bankers and the financiers for solar parks to make them more bankable. So these kind of three categories of problems we think can be solved with a Unity chip. It's a SIM chip and a Bluetooth chip put together in the back of the solar panel in the junction box, and it's installed to our customer, the solar panel OEM, in China. So we actually sell the chips, and we also sell data with clicks. So we sell chips and clicks. That's what we do as a business. We create a data oracle. We're an AI-enabled data oracle like Chainlink, but we also are an auxiliary services network. And that auxiliary services network is built by creating infrastructure at the edge. Our chips go into panels that go into strings. They also can go into batteries for storage. We create a massive data lake on the solar park, and we also tokenize the data every 30 seconds. So this is a massive data lake, and we create a brand new data set that we keep at the edge. We do not backhaul the data to Azure or Amazon or Google Cloud, because the cheapest compute in the world should be close to the cheapest solar power in the world, and that's a DC bit of power coming off a solar panel is now the cheapest energy in the world. So if you want to bring compute, we want to bring the compute to where the solar park is, and to think like distributed systems engineers as blockchain allows us to do. So we really provide benefits to the solar panel OEM, our customer. We provide benefits to the bankability of a project and making it more commercial and financeable. In fact, we create a digital fintech layer on top of solar. And what we can do is protect this initiative with some patents, and we want to license access to this patent with a utility token. So when you enable our sensor on the solar panel, you burn a token, enable the license right to this particular sensor, and then it creates a project asset token to tokenize and provide an investment offer to the solar park. We don't own the financial offtake from the solar park. We want to put our foot on the data. The data all becomes the moat that we capture to create other value-added services. We can do this now because Moore's Law has brought the price of the chip down significantly, and Swanson's Law is an exponential law on the power of solar panels being more efficient, and we found our efficiency last year. We're able to get our product market fit, and over the last 3 years, we've raised $3.5 million, and now we've got committed capital to build the tech with another $10 million. So we are now using other exponential technology, generative AI, to help deliver the code, manage these massive data sets, and provide this signal, this financial green signal on top of solar. And the solar industry is growing to be $1 trillion industry right now. It's going to be $2 trillion in the next 2 or 3 years. and then it'll double again 2 or 3 years after that. So by 2040, solar will be a $10 trillion industry. And if we can be the guys that digitize a portion of that asset class as a real world asset class using our DPIN strategy, then we will be superheroes for democratization of energy and the sharing of energy worldwide. So we think we can get started over the next 3 to 4 years, democratizing both the utility scale solar in Europe and in Australia, and grab 3% of that available market. Will be about $100 million in revenue in sensor sales and data sales. And this is our market opportunity. We've done a full business plan and market sensitivities. In order to secure $10 million, you need to have a significant bit of planning and simulation with your financial model. So we've done this already in the physical world. Now we're adding the blockchain and DPIN world on top of it. So we have unit economics that pay for the chip in the field. About 4 years it will take to pay for the chip in this next year. But as we get our own ASIC designs, the chip will be paid for itself in less than a year. And we compare ourselves to others in the industry that are not DPIN enabled. We provide this Web3 ownership of solar, and we make solar panels Web3 composable. So we can deliver a green bond, a debt product on a solar park, and make the coupon, the payout to the bond, programmable. So every day we stream electrons into DeFi money into a payment to your bank account or your crypto wallet. And no one in the world is doing this. So we have traction now for 2 million sensors, 1.5 million sensors for our external customers, and 500,000 sensors for our own solar parks we're looking to finance in Australia. And so we're raising capital to build solar parks in Australia as physical infrastructure. And we're also raising capital to the seed fund for our foundation in Lugano, Switzerland, to create our utility token economics. So there's opportunity for people to help us create the initial seed for our token economics. And we won't issue our test net or a main net until we have actual infrastructure built. And this is not an ICO play. We're tokenizing real world assets that have a yield already in the world. So it's not a promise to a future revenue. There's revenue already there. We're going to compose it into a token economy. The market size is absolutely huge. Our $10 million capital has been committed by a high net worth and family office with an impact initiative. And our team is looking for a little bit more diversity. We have some blockchain people that we're now rolling out a DPIN API, and we want to create an ecosystem to bootstrap this Web3 facing part of our developer initiative. For us, Web3 development is really our developer ecosystem. We're facing the market on solar panel vendors, solar park owners, and we want to bring Web3 developers to our ecosystem to create a three-sided marketplace for solutions using our data. And that's really our go-to-market model. We deliver park operations that pay for the sensor. We tokenize carbon credits and provide grid signaling for future energy trading. And then the data sets are really good for providing insurance signaling, real world tracking of the asset, that the solar panel in Africa hasn't found legs and walked off the solar park, and that we can offer a programmatic yield for a green bond in Africa. We're already in discussions with MCB DAO that want to do 5 gigawatts of solar, which is about 10 million sensors in the department in the Congo, the DRC. We're in another discussion to do this in Tanzania for 2 gigawatts. So we found our fit, we got our product market price, and now we're going for scale. Ultimately, we want to create this financial stack with full tokenization across the whole capital stack to tokenize solar. So we see energy as being the mother of all markets, and we want to DPIN and blockchainize this infrastructure model. So really, if you think about and step back what we're doing, we're mining the sun. We mine the sun for the democratized access. We stream electrons into DeFi money. We call it proof of fusion, proof that the sunlight hit the panel and caused electron flow. And so what if we could turn solar energy into a digital currency for the community? And that's really the economic value that we're looking to create. And I would like to, I guess, constrain my discussion to the 10-minute limit and now take some questions.
Thank you so much, Leon Gerard. Yeah, it looks huge, and there are already comments in the chat, like very positive. Yeah, guys, please raise your hands and go with questions. Okay, again, top investment.
I'm sorry, but I just gotta hop in because Leon, this is very impressive. We've been waiting for a project like this one in the solar panel industry for quite a bit now. I'm from Puerto Rico, and everything is solar here now, and everybody's like pursuing solar and solar. So absolutely love it. Would love to know more about the utility token and all the aspects of tokenization as well. If there's a possibility we can hop in a meeting, I think there's a lot we can help you. But yeah, just congrats and overall. Because it's good.
I just put my email in the chat. I'm on Twitter. Best way to get me is on Twitter DM. LinkedIn is full. I was one of the first people in California on LinkedIn, so I've got approved on LinkedIn. It's absolutely cram packed. So the best way to get me is email or a direct DM. My Telegram handle, Leon or LGV_me. But Telegram is so noisy. Twitter is my best signal to noise kind of capability. We have a massive model, and I'm wearing my Balaji, network state shirt today because we really think that we can help to build network state type economies that are permissionless access to energy, and we want to be the guys that digitize solar. We want to be the guys that are the Dolby of solar fidelity and make that data reproducible and fintech ready.
I love it, man. Love it all the way. Keep it going. I'll shoot you an email with my team.
On the technical stack or the token economics. The token economics, we've already got a white paper on draft. I can go through the utility token, how we're going to do that. We picked Switzerland for a reason. We're cuddling up to the guys at Plan B, at Lugano. So, I know the founder, he's a Dutchie from Bitfinex, and the guys who made Tether. So we want to bring solar energy directly to US dollar Tether and permissionless blockchains. Of course, we love Ethereum as well, but we really want that kind of lightweight client to be able to access tokenized solar energy as well.
I like the idea and stuff. I've worked on a lot of IoT stuff like this in the past. You can probably hear I'm still sick. Just like with helium and stuff, you always run into a capacity issue when you're putting stuff on chain.
Yep.
And you're minting and you're going back. That's why they moved to Solana. They destroyed their project a few times over now. Solana, the mobile token, and everything else. So I'm really interested in how you're handling device identity on chain at scale.
Yep. So we have some plumbing diagrams that we can dive into. So we create a witness proof every 30 seconds on the sensor itself. Those ingredients, those elliptic curves, are really native and held at the actual solar panel. The solar panel is running its own HD wallet, and it runs its own keychain material at the edge, powered by the sun. So every time we create a data packet of 30 seconds of energy produced, we create a measurement, and that's got a witness proof around that wrapper, that payload. And then that goes to a gateway for ingestion, and we're blockchain agnostic. We can take those ingredients with some blockchain middleware and post that at the edge, and we do that edge compute not on a pruned gateway, but that full node is held at the solar park. And then we take summary data, and that's what goes to a public chain. So we've scaled the blockchain requirements really where we're trying to be fit for purpose. Ultimately, we need to be traveling at wire speed, so the metadata that tags the energy green will flow with the electrons. That's what we were doing. We're really packetizing energy, and every 30 seconds we have metadata that flows with that green energy. So we tag the energy green. That allows us to a green signal.
The blockchain, though, is your weakness in this. Like, the other part of the tech is great, but when you get to the blockchain element of it, the RPC nodes themselves on the packets, same thing with metadata, you can only have 100 concurrent streams. So the moment you get too many devices on it, you're going to have multiple RPC nodes. This leads to centralization. This leads to all the different problems you have.
So we just don't have one gateway. We have edge gateways that accumulate. So we use a Bluetooth mesh network that can be scaled and right-sized. so we can actually tune with some edge gateways that capture that middleware or capture that middle packet as it transitions to its master node located at the park. So we accumulate with edge compute to do that.
What you're talking about is tech on site. I'm saying that's great. It's great tech on site. But when you go from tech on site to a chain, a chain, no matter what you do, has 100 concurrent stream block per RPC node. So that means that you need multiple RPC nodes all the way through. So even if you have one center, you're communicating that, and you can do roll-ups, you can do everything else that's still a native cap, so to speak, on anything that IoT stuff goes into.
Correct. So we're not trying to bring 30-second information for 10,000 solar panels on a 5-megawatt park all to the public blockchain. We right-size the data resolution for each purpose of that node. The rich data stays at the park, and summarized data still either a roll-up or a type of aggregate proof is put into a public Oracle blockchain, and that is done at 5-minute intervals. For energy trading around the world is done at 5-minute or 15-minute intervals. So we definitely have the right sizing for the sampling of the data to get the resolution we need at the park, but then we need to be able to deal with public blockchains and the finality that we can only have, whether it's 3-second on Polygon or, pick your finality for whatever DLT you're going to work with. We're working with IBM Hyperledger, Hedera. We're working with second layer on Ethereum. We're also working with some other blockchains that are DAGs. So you can look at those as well, like IOTA. We're blockchain agnostic because people need these proofs at the edge that no one is counterfeiting the solar panel and putting brown energy into a green equation, right? That's what's happening with these fossil fuel companies.
There is a great one for this, by the way. So I'm glad to hear that.
Yep. So Hedera is friends of what we're doing. We're doing this in Australia. We're friends of Hedera. They already have a carbon registry for some of this, and they have the FPOS gateways for live settlement in the advanced payment network that's there in Australia. Yeah.
I remember when they first raised. So literally when they raised that 200 million, they came in right after because it was a giant crypto winner.
So the real difference is right now on solar parks in Australia, it takes 30 days to mint a carbon credit to then sell that into a regulated market. And the data set comes from a smart meter at the edge, and it changes hands 5 or 6 times before it's offered for sale. And you have to trust that no one is tweaking a text file. It's basically a glorified FTP machine of unencrypted text. And that's how carbon credits are minted by a government regulatory authority. We can really mint using witness proofs, roll-ups or aggregate proofs, a carbon credit that is ready and fungible and liquid anywhere in the world every 5 minutes. So we bring liquidity and fungibility to solar parks that need this. If you hold a token on a solar park using our sensor technology, that means our group of participants have liquidity. They're not locked into an illiquid asset.
Yeah, I like your product. I like what you're building. My only comment would be, I think that the blockchain connection elements are a lot more. You're going to run into more problems than what you think there. Having brought millions of transactions on systems, everything else, I can tell you.
So Hedera can work at wire speed on 3-phase power, which is 3 signals, 120 samples per second. Right. So it can definitely do this. So we're really friendly with Hedera. Ultimately, we want to tokenize even AC power. We're tokenizing DC power. So we're not trying to tokenize the whole grid. So we're really trying to be.
I'll tell you because I know that people have to get going to the next thing. I'll tell you the problem with Hedera. The problem with all of these systems is not the write speed. It's the read speed. So Hedera can write really fast, but when you're trying to read from it or anything else, you're going to get into massive delays, and it gets very expensive to do. So that's why you get to like Anchor and all the other RPC nodes that will index chains and give you an API to talk to back and forth. But if you're using the indexer that the chains provide, the indexers that they provide for read layers are often missing certain blocks or missing certain elements. So you always have to audit the individual indexer as well?
Well, we're looking for help to bring the Web3 economy to the solar park infrastructure. We want to bring various different deep in approaches to do this. And we welcome participants. We're building a testnet for later this year. And we're looking for people to help us bring the right attitude and skill set to this equation. So thank you. Reach out. You've got my details.
Thanks.
Thank you. Okay. If we don't have more questions.
No, Monica, I think we have one. Let's just wrap this up quickly from Ryan Bayard. Are there any current paying customers? This is the last one.
Yeah, so we have customers that are prepaid. We don't have infrastructure at scale yet today. We are co-located at the university with 40 panels and 200 to be built this coming quarter. We have an order book to build 3,000 homes with battery and solar over the next 12 months. So we actually have got prepayments from that particular customer. But we do have an order book for 2 million sensors, but they're not in the field built and delivered yet because they need to be built by our solar panel OEM in China, and they require type tests and testing separately. So we really are a technology licensing company, much like Dolby. Dolby digitized music and then licensed it to Hollywood eventually. So we're licensing our chip to the OEM side of the business, and then selling the clicks for access to the data to the user side of the business. So this is not quite ready in the field yet, but by the end of this year, we'll have solar parks enabled with OEM product.
All right, I think that settles it. I think we have, way too more questions to be asked here, but due to our tight schedule, let's pass the word to our third project. Again, thanks, Leon, for amazing pitch. I think it was really great for everyone to discuss your ideas. So yeah, let's move on to the third project, which is Bring Web3. And let's pass the word to its founder, Iri Zohar. And by the way, guys, just a quick note, if you want to receive the latest information about our calls and upcoming collective calls, we will just send you the Palo Alto invitation right after the call, so just don't go away too quickly. Okay, so enough chatter, let's go.
Right. Hi, thank you, everybody. So I'm Iri Zohar. I've been an entrepreneur for many years. I've built a few companies. I've been fortunate to sell them. They're all in the advertising and retail space. And I've been loving Web3, and I found a way to connect my knowledge, my background into Web3, which is Bring. So if okay, I'm gonna share a few screens with you guys. So what we're trying to address is really what we feel is a very big opportunity, which is a cashback. If you look at the cashback, in the fiat world, it's a massive business. $8 billion market size. Buyers love it. I mean, very popular in America, also around the world. And we feel that this could be awesome for crypto, and it's really almost non-existent in crypto if you think about the numbers. So we have 400 million users. They are in wallets, they are in exchanges and sexes, but nobody's offering them cashback. And if you want to know why would wallets, not offer cashback to users, because it's complicated. You have to really build specific business, and really solve a lot of problems to provide cashback, and, they just can't do it. So our solution is simple: to build that solution, to build a provider which connects retailers, Web2 retailers into wallets and exchanges. We've been fortunate to get a lot of really good responses from the market. You're seeing here, we have more than 300 retailers who've signed up with us. Some are really nice names, as you can see the logos. And let me show you quickly how this works before we go into the details. I'll show you a quick demo. So let's say, let's say you have a wallet, and that wallet installed our solution. So you browse around the web, you go to Adidas, you want to buy some shoes, and then suddenly your wallet is saying, hi, you can make money, you can make free crypto here. By the way, it has no price, meaning if you're getting a cash back from your credit card, you're still going to get it, but you're going to get crypto on top of that. You can choose which token you want to get your crypto in. The wallet decides which one it offers. We're actually working with a centralized solution, so we were able to support more than 1,700 different tokens. Any tokens the wallet wants, you could offer. This example, it's ETH and DOT, it's a Talisman, it's a Polkadot wallet. So you agree to the terms, you click activate, get the legal terms, and just shop regularly with your credit card. You don't pay with crypto. It's regular shopping. And then you're going to see whatever you've earned in this little cash. So we manage everything for the wallets. They integrate our solution to have that pop-up, and they integrate our solution inside the wallet with this cash, where you can see all the tokens I've earned from different deals. As long as I can return my shoes or return the merchandise, it's locked. Because if I return them, I lose my tokens. But if I don't, once the return period finishes, it goes into available cashback. You just bring it on board to my wallet, and basically it's mine. Other way that I could do it is I could just go and decide that I want to buy something. I want to make crypto when I buy it. So when I want to order a flight, I want to buy a computer, I want to do my insurance, I know that I could just do it for my wallet, and that means I'm going to make crypto. So I just go here, I could just, let's say I want to buy some jeans, I click Levi's, I see opportunity, I click here, again I choose how I want to get my crypto, agree to the legal terms, and that's it. I go to the store, same idea. Whatever I buy, I'm going to make crypto, which is going to go into my cash. And so all those you saw, and this is good, really good for everybody. So if you think about the wallets, why would the wallet want to integrate a solution? Number one, something awesome that you can offer its users. It's a really good reason for me as a user to choose this wallet as opposed to others. It gives me free crypto. Our revenue share, the revenue model is that we get an income from the retailers on the sales that we generate. We give 50 to 60% to the users as cashback, but the rest we divide between us to the wallets. You do the math, it's big money. It would be around $5 per year per user, including non-active users. So a lot of money for the wallets. Another nice thing is think about a wallet that has its users are not active. Somebody installed the wallet, he forgot about the wallet, it's sitting deep in his browser. Now that user, that wallet installs the technology, you get automatic update by Chrome, and then the user goes to some kind of a store, and then his wallet pops up, so you can get now free crypto. So that wallet now is back in the attention of the user. It came back to life. And also, what your wallets really like is the fact that they get all those amazing brands. You saw Expedia, Gap, Banana Republic, Forever 21. So they get to be associated with those really nice brands and really, beef up their brand equity. It's good for, the retailers because it's massive audience. I mean, we know that it's big and now it's even going faster in the bull run. You're giving users something which really incentivizes them to shop. I mean, people who have crypto wallet or in a crypto exchange, they love crypto. So give them crypto that would make them choose that specific retailer, and we drive, store engagement. We have another part that we've added, which is we work with young blockchain projects, and we offer them also. So the user actually can make money also just from visiting the retailer. We call them exploring. Explore the retailer, you can get a few, for like a new project and type tokens. And then when you actually buy, you get, the ETH, the Bitcoin, the more lucrative tokens. So the motivation for those blockchain projects is that, they get exposure. They get they're promoted by the wallets that users trust. So it helps them build their legitimacy. So really good for everybody. So we make money from those two different venues. As we said, we get rev share. When the users buy, we're paid by the retailers. So some goes to the user, we make money. And also we get paid by those new blockchain projects we promote. So that also generates an income, which everything we get, we divide with the wallet. So it's rev share with the wallet. Massive market. I mean, if you think about the size, and really took very pessimistic numbers here, 200 million wallet holders, actually it's 400 million. From our perspective, anybody is a wallet holder. Also, if you have an account with Binance or Coinbase, you're a wallet holder because you have your Binance and your Coinbase wallet, and they could offer the same user experience you saw. And you see the numbers. I'm happy to share more data later, but you can imagine the market is massive. We have a lot of nice partners. We just concluded an investment round now. Starkwell invested, they're also a strategic partner. So we are working with them to integrate into their ecosystem wallets. They have Argos and Bravos. Talisman is a partner. In our launch, we're going to launch with Aurora and Casper, the blockchains which are integrating us into the wallets. And then we work with the different ecosystem players in the ad tech. So the companies are called affiliate networks, which give us the integration into those different retailers, and there are affiliate agencies which promote us they just love us. They love the solution, so they promote us to the brands. And you saw the list of brands we have, so people like us. Revenue-wise, the numbers are, pretty aggressive, but that's the nature of this stuff. Since, by integrating with wallets, you instantly get access to all of the users, so you can go really quickly just by integrating to big partners. Also, the cash flow is really convenient because, as opposed to a company, you guys know, a company like Lolly or StoreMix, other companies who are trying to do cashback, but they go to consumers, they try to get consumers, that's very expensive. You have to pay for the lifetime of consumer, it's a really cash drain. In our business model, we have share with the wallets, but we have zero client acquisition costs. We just are distributed to the wallets as a user, so you can go quickly, and it's positive cash flow because you just pay once you collect from the retailers. Once you generate an income, we share it with the wallet partners. So competition-wise, again, we have Lolly, StoreMix, we have a bunch of companies who are offering crypto cashback, but they're all B2C. So if I'm a wallet, Lolly can't give me a solution. Lolly goes to consumers, they compete with wallets. So we're the only company who goes to wallets, who goes to central exchanges and offers them to offer cashback. We have we're beginning to work on our token strategy. I'm not ready to talk about it yet because it's really initial. We're basically focusing on launching. We're actually planning to launch in Paris Blockchain Week, which is in April 9th. And actually the owner of that event, Michael Amar, is one for investors. And we're focusing now on that simple, non-token, just old economy type business model I spoke about. In parallel, we're working on our token economy, and we have, I think, a very strong idea in that direction, but that requires a lot of work. How much time do I have? That's basically the pitch. Happy to take any questions. By the way, my details are in the chat if you want to reach out.
Thank you. Thank you so much, Yuri. Yes. Any questions? No questions. Everything is clear. Yeah, maybe I ask Yuri, and what about your partners? How many partners do you have so far for now?
300 retailers, more than 300 retailers who've partnered with us. We have 5 blockchain partners. So I think I showed that in my slide, but it's Starkware, which is also an investor, and Talisman, which is a Polkadot wallet, and Make and Casper, which are both in the Casper ecosystem, and Aurora, which is a layer 2 on Onion.
Okay, thanks. Yeah, I missed it. You mentioned. Yeah, just a bit for the cashback system, it's very important, right, to have like a wide net of partners.
Yeah, especially retailers, because that would determine the user experience. So when a user wants to buy something, we're actually working a lot on our search functionality. So anything you search, any term, you have a way to make crypto when you're buying that. So whatever brand you put in, whatever country, destination, fly, whatever you put in, we want to always have something to offer you so you can make, crypto cashback, whatever you do.
Okay, thanks.
Yeah, I think I just got something really quick. I know you mentioned that you're still working on the token and everything like that. But just really quick question for the token, is that going to be part of the cashback as well, or is it more of like kind of the back end of the economy of the whole company?
Token that we're thinking about and really early on, actually something very big. We think, which we're pretty excited about. We think of it as some kind of like infrastructure where basically it's actually bigger than cashback. So it's a way to solve a few of the big cashback challenges, but it will be relevant for any rewarded advertising. So also in case where an advertiser pays for a survey or bring a friend, learn and earn, all those situations where advertisers pays, that protocol, which the token would be the heart of, would be relevant. It could also be relevant for actually the mass advertising, the display advertising, because there's an issue there with the cookies. It's really hard to get data about users now. So we think that by connecting, this idea of rewarding users for sharing the data, that could address that issue also. So actually we have a very, very big vision.
No, definitely. It sounds interesting. And as of right now, I've talked to some cashback companies that try to implement some utility tokens here and there, but I haven't seen anything that convinced me. So yeah, would love to talk to you privately and see how that's going.
Sure, happy to do it.
Thank you, Malika. Thank you, Ivan, for having me.
Yeah, it's so nice to see people connecting here. And again, I want to say big thanks everyone for visiting our yet another collective call from Palo Alto Research Lab. And as I promised, I'm going to share the links to our invitation for right now. And Palo Alto channel. You can subscribe and get the latest news and updates. So yeah, welcome you all to our another call, and I think we're gonna see you soon. Thanks.
Bye.